The Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and our top story for the day is obviously the market and economic reaction to the news out of the Middle East last night around 7:45 p.m. Eastern Time. We started receiving word that the Israeli Air Force had made a series of strikes into Iran, and we continue to get news over the course of the night, giving us more information on exactly what has been happening there. And unlike what we saw in 2024, where in April there were some munitions that were lobbed back and forth that ultimately didn't cause, any major damage to either party. Same thing happened in October of last year. This, according to all indications from the Israeli government, is a far grander operation in scale, likely to be a greater one in duration, with them indicating that this could last weeks or potentially even months. And also in terms of the targets that it is targeting, specifically going after Iranian government leaders, as well as the Iranian nuclear program. So those are kind of the broad strokes of what we learned last night. We can obviously dig into more detail, but what I can tell you is that the market moved, not unexpected. Oil prices up meaningfully, with West Texas Intermediate at one point last night in, what is obviously a more thinly traded overnight session, up, 12-13%, now up around 6.5%, and kind of settling in that range for the last couple hours. And U.S. equity markets down about 1%. And so to this point, Mike, I think that the market reaction can best be described as paying attention, but still not believing this is going to be a longer-term thing that is, significantly disruptive to the world economy in any way, shape, or form.
Yeah, wait-and-see approach from equity investors, I think, most certainly. And to be fair to them, that has been the playbook for the last 20 years. If you followed it, you made a lot of money. I think everybody knows the basics here. A third of Middle East oil approximately flows through the Strait of Hormuz. Iran controls a lot of that. It would be to their detriment to cut off oil supplies because that's where pretty much all of theirs goes through, and they need the dollars to continue to support what is a much weaker economy. But that's obviously the threat when we talk about Iran, is a boatload of oil moves through their borders in order to get to markets. And the question is, does this escalate in a different way than previous tensions and flare-ups? And to be fair, this is a much more significant flare-up than what we've seen for the last several years.
Yeah, it's basically the only question that matters is, hey, what does this mean for, again, in terms of how this impacts the United States? There are a few things that matter. The biggest one and kind of the first order one is, hey, what happens with oil prices depending on the combination of Iranian production and transport through the Strait of Hormuz, as you mentioned. So that's kind of the first thing that you sit there and you watch. The second piece on this is, does anything larger happen regionally? And gut feeling is there's not much juice there, simply because I don't think I don't think there are many parties in the region that are truly sympathetic to the Iranian government. There are ones that certainly kind of play both sides. The Qataris obviously are kind of front and center in that respect, in that they basically act as kind of brokers between all these different parties that don't really like each other throughout the Middle East. But you look at the actual governments that are in power, and most of them, A, have enough problems of their own right now that they're dealing with, and B, just kind of say, okay, fine, like maybe we just don't have to deal with this now. Like, you guys handle this, and we'll go from there.
Yeah, obviously the Houthis, a Iranian-backed militia in Yemen, significantly weakened recently, so their willingness and ability to strike back against anyone as a result of this is questionable. The other thing that, far from the foremost Middle East expert over here, but what others have been talking about is the Joint Comprehensive Plan of Action, the agreement on Iran nuclear deal that was signed by President Obama, withdrawn from by President Trump, is due to expire in October of this year. At which point, again, the United States isn't participating in this, but what some posited here was, if they can hold out until October, which is only 4 months away, the idea of Iran wanting to develop weapons and furthering their nuclear ambitions, they may still be subject to strikes from Israel, but there's not going to be that snapback of sanctions that you would have had during this 10-year deal that was in place. So yeah, I don't know.
So I think, again, it's all going to depend on what happens in the coming days and weeks as it relates to Iran's capabilities to retaliate, how this affects broader commerce in the region. What I can tell you, and again, this is, in the first 12, 15 hours since this has happened, by and large, the take that I'm seeing from people that do know way more than I do on this, there has not been any meaningful retaliation from Iran to this point, which has surprised observers pretty significantly. The expectation was that shortly after any major Israeli assault, you would be seeing dozens, if not hundreds, of ballistic missiles in the air heading towards Israel. And all Iran did was basically launch, 100 drones towards Israel last night after this that basically were all shot down and had no, meaningful impact. Part of this is likely due to the fact that the Israeli military, in addition to going after these nuclear targets, also went after, high-level Iranian government officials, to the point where the tally that I've seen is anywhere from 15 to 25 senior Iranian military members were killed in the initial wave of strikes, including the head of the Iranian army, the head of the Iranian Air Force, the head of the Iranian drone program. I mean, you go down the list and you're like,
who's left?
Okay, I could see how this could, really cripple any potential response. And Israeli attacks continue over the course of the day today. You've got Israeli refueling planes that are basically operating unchecked in Syrian airspace right now. And so it's pretty clear that Israel has control of the skies at this point and is continuing to lean on Iran in order to attempt to, prevent any kind of large-scale response, if possible, by further targeting airfields and, suspected missile sites and things like that. So I think we're going to have to see what kind of response Iran is capable of. I will be the first to admit I have no idea at this point, and none of us do, because we don't know how much damage the Israeli attack has done. But the big thing that I think everyone's going to watch over the next 5-6 days is, hey, what kind of retaliation can Iran actually mount? If it's not sizable, do we see them heading, making signs that they want to negotiate more quickly and get some kind of quick end to this? And then is Israel going to allow that to be, the case where this can be a negotiated end, or are they looking for some type of regime change that typically requires a far larger operation, including ground troops? And what would that potentially mean for the region? So there are a ton of unanswered questions. Again, I don't think we know a ton right now, and there's still a lot that can happen in a short period of time. We're going to know more as each day goes by here, but right now, this, I think, is the key story that is driving questions about, where markets go and what we're seeing on that front. Anything else to add in general there, Mike?
No, not a ton. I think you just have to wait and see on this.
Let's take a quick break here. When we come back, I do want to talk about now specifically what this means and kind of what that oil impact means on U.S. markets and the economy. So let's take a quick break here, and when we return, we will discuss that right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Preparing for retirement is a time-consuming and challenging process. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're at the point where you can see retirement approaching, now is the time to make sure your plan covers all the bases. Our new guide is called Your Retirement Preparation Checklist, and it discusses a variety of important topics as you make decisions for later life. Everything from reviewing your income sources so that you have a full understanding of how much money you'll need in retirement, to addressing any outstanding debt, which may lessen your overall financial burden. Planning for retirement takes a great deal of time and effort, and this new guide is designed to offer you the guidance you may need. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Now's a great time to register for the DAV 5K, taking place Saturday, November 8th at Fort Independence on Castle Island. The race is sold out each of the past 4 years, and slots are continuing to fill up quickly. So don't delay. Visit dav5k.boston and reserve your spot or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th. For this year's DAV 5K, sign up now at dav5k.boston.
Mike, so let's talk about, kind of day-to-day for us in the U.S., both as, humans and as investors, because those are not always the same thing.
True.
Occasionally you have robot investors, especially in today's day and age. But let's talk about this from kind of day-to-day life of an average person. The only place, assuming that this stays relatively contained, that you see a potential that I see a potential impact from immediately is at the pump.
Yeah.
And what I have is Patrick DeHaan, who he runs Gas Buddy. Does that mean he is the Gas Buddy?
Yeah, he's your personal gas buddy.
I
didn't know his name was Patrick. Yeah.
His name's Patrick. And he basically said, look, assuming that, I'll quote him actually, gas prices will likely start to rise across much of the country later this evening in response to Israel's attacks on Iran, which have caused oil prices to surge. For now, I expect the rise to be noticeable but limited, approximately 10 to 25 cents a gallon thus far, but this could change. And basically it's going to change depending on how the next week or two goes, where hey, if it looks like the Iranian response is going to be muted either by their desire or lack of ability to mount any kind of counterattack, then you're towards the lower end of that range. Otherwise, you have the potential to go higher depending on exactly what they do and how they respond. But 10 to 25 cents a gallon, it's not, again, a huge price increase, but it's something that if you're filling up, a 15-gallon tank, you're talking about anywhere from $1.50 to an extra $5 in order to do so.
Definitely noticeable.
In the United States, our demand for gasoline, I looked this up this morning just because it's always good to have the facts when you're trying to figure this out. Mike, do you know how many gallons of gas the United States uses a day?
Don't make me guess.
No, I want you to guess. I want to see, I want you to, on the spot, I'll give you 5 seconds. I'm going to continue talking, but now I want your answer for how many gallons of gas the United States uses a day.
I'm going to go to the tune of 50 million.
400 million. So you were off by a factor of 10.
Yeah.
Which is not great, but
no.
it's fine. I put you on the spot.
Not terribly close.
So the U.S. uses 400 million gallons of gas a day.
How many American adults are there?
Probably 250 million.
Yeah, okay.
Ballpark, you're talking like a gallon and a half per person per day.
Yep, got it.
Which, I buy that.
Yeah.
So 400 million a day. So if you do the math out, if it's a 10 cent, let's take the middle of the range. Let's say it's like a 20 cent price increase. You've got $80 million a day that now has to go to gas rather than going to other stuff.
Yep.
And if you extrapolate that out over 365 days, it's about $29 billion that has to go to buying gas as opposed to other stuff. Now, remember, this is not just for individuals. This is corporate use of gasoline as well. And so I think the place that I land is, hey, if it's, again, a 10 to 20 cent increase, it's uncomfortable, but I don't know that that's enough to really skew the U.S. economy in any way, shape, or form, given just the overall dollars that we're talking about here. If this gets worse, like you say, okay, how bad could it get? And Iran closes the Strait of Hormuz because of, they dump a bunch of, old ships in there and sink them, or they mine it, or whatever it is they do. And you've got oil prices that go from, 73 on West Texas Intermediate up to 93. Okay, now we're talking, $4.25 a gallon. It's a dollar increase. It's 5 times this size. Now it's $150 billion being sucked out of the U.S. economy and having to go to, pay for these higher prices at a time when individuals are already saying that they're stretched, as far as how much they can spend, and companies are already fighting tariffs as far as their pricing, that starts to look a little more concerning to me. But at this level, I'm not sure that there's a huge impact on the U.S. economy, especially because I only told you the bad side of things. The good side is, hey, all the oil companies that produce a bunch of this stuff domestically, not so much in the New England region, but Texas and Pennsylvania and Colorado and the like, okay, they end up making more money when these prices are higher as well, and we do export a bunch of oil. So higher oil prices are not the net drag that they were previously. The only reason that I'm even, kind of remotely concerned about them now is just because companies and people are potentially heading into a summer of higher prices otherwise, and this could just be more fuel on the fire, no pun intended.
Yeah, puts a little bit more focus on trade deals and whether or not we have increased tariffs in the second half of this year. You get those two combined, and you could have a real inflation problem and a real consumer spending problem.
Other interesting things just that I'm noticing looking at markets today. Gold, as you would expect in a time of crisis, getting a little bit of a short-term bid, up at $49 an ounce to $34.51. The piece that interests me is not what's going on with gold, but rather what's going on with the 10-year Treasury. And granted, this is something that is not unique to the U.S. 10-year Treasury. It's happening across the world today with yields moving up. But the 10-year has moved up by 5.6 basis points to 4.413%. And so this is something that you kind of look at and you go, okay, like yields are moving up around the globe, but the U.S. used to kind of have this unique place where bonds would get bid, during a flight to safety. Is there something different here? I don't know, but I at least take note that U.S. bonds are not getting the bid on flight to safety here.
Right. I guess last non-market reaction to all of this that I think is worth mentioning. By all accounts, President Trump didn't want to see these strikes go forward. We can't know definitively, but he made some direct statements on the fact and was intending to send negotiators to Iran this weekend to continue nuclear talks and arrangements with Iran. The fact that Israel went through with this in spite of President Trump's best efforts and his seemingly increased influence and better relations with Israel compared to President Biden, I find interesting. Don't know what to make of it, but is it as big a frustration for President Trump as it seems to be on the surface is a question that I have.
There are two ways to read this, and I think I don't have strong feelings as to exactly which one's right today. The first is, and look, it's very clear that the United States knew this was coming.
Yes, they removed forces from the area.
They sent out notifications, 2 days ago, basically saying, yes, we want to evacuate, some personnel from the area. So it's clear that the United States knew this was imminent. There's a difference between knowing and giving your blessing, and I think this is where, the question is, hey, is the U.S. trying to play the good cop and letting Israel play the bad cop in Iran?
Right.
Possible.
Yep.
The other possibility is, and look, I tend to think that President Trump, by and large, wants to avoid armed conflict where possible.
He's made that really clear.
It's kind of been the general tenor of his first term and, how he's approached things this term. If Israel actually, openly defied the United States rather than kind of following suit with what the U.S. has typically guided, that has potentially significant geopolitical implications over the next decade or so. Let's take a quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Your Retirement Preparation Checklist. Mike, one of the items on this is to address outstanding debts, and by that, I don't think we mean pay everything off, but more make sure you have a plan for different types of debt.
Yeah, there's always been that real goal for I think a lot of retirees to have no mortgage when you get to retirement, and I still see people trying to accomplish that even if they might have a sub 3% mortgage, for example, and there can be some psychological benefit to paying off that piece of debt, but where it comes down to is prioritizing, hey, I might have a car loan, I might have a home equity line of credit, and while the mortgage could be the biggest payment, it shouldn't always be prioritized.
Beyond that, I also think it is something that you need to figure out how it fits into your monthly budget and whether you can continue to spend in the fashion that you've been spending, or do you have to make changes there?
Right. A lot of people use some rules of thumb when it comes to how much income they'll need in retirement, and those can be useful, but it all has to be customized to your individual plan. And the last thing you want to do is pay a whole bunch in taxes just to be able to pay down some debt that wasn't really a priority in the first place. And so definitely addressing your debt and knowing how to do that intelligently when you approach retirement is key and important.
The guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001. That number again is 800-393-4001, and the guide is titled Your Retirement Preparation Checklist.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in sell-off mode following Israel's strikes against Iran overnight, sending oil, gold, and geopolitical uncertainty higher. Right now, the Dow is off by 1.5% or 677 points. S&P 500 is down by just over 1% or 62 points, and the NASDAQ is down 1.2% or 246 points. Russell 2000 is off nearly 1.5% or 31 points. 10-year Treasury yield up by 5 basis points, now at 4.41%, and crude oil jumping over 7% higher now, trading at just below $73 a barrel. With oil prices spiking due to concerns over the supply outlook, Chevron, ConocoPhillips, Occidental Petroleum are up anywhere between 1 and 3%. Defense stocks are also seeing gains on the day. Lockheed Martin and RTX are up by about 3%. Several airline stocks are seeing losses on the prospect of higher fuel costs and slower demand. Due to the rising tensions in the Middle East, United Airlines and Delta are down over 4% now. Cruise lines, including Carnival and Royal Caribbean, are off anywhere between 3 and 5% due to heightened risks including possible deterring vacationers and increasing oil prices. Outside of the Middle East news, Adobe posted stronger than expected second quarter earnings and revenue and also raised its annual outlook. However, analysts say generative AI could take away from Adobe's business if it doesn't move to keep up. Adobe's stock is down by 7%. According to the Wall Street Journal, Walmart and Amazon have recently explored whether to issue their own stablecoins in the U.S., and shares in furniture retailer RH jumping by over 11% after it swung to a quarterly profit despite tariff uncertainty and a shaky housing market. I'm Tucker Silva, and that is Wall Street Watch.
Mike, anything else that we want to add as it relates to what's going on between Israel and Iran at the moment? I think we've covered a decent amount of ground, but is there anything that I left out?
Not that I can think of. Let's move along, and if there's any breaking news, we'll be sure to revisit.
Okay. This morning at 10 a.m., we got the University of Michigan Consumer Sentiment data that showed a notable uptick from the month of May. This as tariff news has kind of, I'll say improved.
Taking a back seat?
Yeah, it's, obviously it's still there, and I think we're all kind of just sitting there waiting when's it really going to show up? So you've got sentiment improving a little bit. Inflation expectations improved as well. And I guess I was talking with, I think it was Mark Vendetti who was on yesterday, and he mentioned University of Michigan Consumer Sentiment because of the inflation numbers there that had just been sky high in the last reading. And I kind of made the point I'm not sure that the University of Michigan sentiment is valuable at this point simply because it's so divorced from what we've actually been seeing in inflation numbers. And I spent some time thinking about this actually this morning just because I saw this in the stack and I was is that a viable opinion to have, or am I just trying to toss out a set of data that I don't want or I don't like for some reason? And I think ultimately I just came back to it's not telling us something as far as what we should realistically expect inflation to be, but it still, I guess, can maybe have some kind of vague directional value as far as, hey, people expect inflation to be higher or lower than it is today, but I'm not sure that you can take much more from it than that.
Yeah, and I'm not even sure you can say they expect it to be higher than it is today from it. I would maybe look at it more as an expression of frustration about the economy as a whole.
Could be.
Yeah, I don't know. I mean, how many people, when we were talking about inflation of 2022, right? June of 2022, when inflation printed at 9%, how many people wrote into this show and said, that ain't right, my inflation's 15% year over year?
Right.
And so I think we always have a bit of a disconnect between what the government reports on inflation versus what individuals experience. So I'm not sure I would read into it as, oh yeah, inflation's going to go to, what was the most recent 12-month read, 5 something?
Well, I guess not so much that, but just more along the lines of, again, we didn't get high inflation expectations back in the 2010s. And I think that meshed with, what we saw, which was not much inflation actually.
Right.
I think I guess what I'm getting at is, hey, I don't buy that inflation expectations are actually, 7% or, wherever. Just because I don't think, especially given how on the inflation data more so than other places now, there's just this clear partisan bias that shows up.
Yep.
You know, where there was one reading in the last couple months where I think Democrats said like inflation was going to be like 9%, Republicans said it was 0.
Yep.
And it's like
it immediately flipped after the election, by the way.
Right. Well, no. So the consumer sentiment thing, I get when it comes to, hey, you want your guy in office. Of course, you're going to say things are better. I get that. We hadn't seen this kind of polarization on the inflation numbers previously, and so I kind of look at that and I'm like, okay, like what do I even do with this?
Yeah. I think the way that I would treat it would be, there are consumers out there who are worried about inflation running hotter, and so if there is an actual cause for it to do so, it could become a bit of a self-fulfilling prophecy, but in and of itself, I don't think expectations are going to start moving inflation immediately, because what's been pretty clear is that in spite of those inflation concerns, those same consumers are not really pulling purchases forward like you would anticipate if they truly believed prices were going to go up. Right? I mean, I've seen no evidence other than cars occasionally in January,
the retail
February.
numbers for February and March were pretty convincing in that fashion, I thought.
Yeah. But it didn't last, and it didn't really cause a bunch of inflation.
Here and there. Yeah, I mean, you've seen some things, I guess. Well, we'll see. I guess my big thing is I'm kind of... I've just kind of soured on this University of Michigan survey, especially since they moved it in the last year. I don't know the exact date, to being an online survey, which has also seemingly brought out some of these wider, outcomes that they're saying now. And so I wonder if the methodology change has, affected what they're getting for one reason or another. I don't know.
Either way, we report it when it's bad. The news here is that it improved dramatically month over month. By a significant change in terms of both the outlook on the economy as a whole as well as inflation expectations. And so I don't want to undermine that. The report for June was a market improvement from where we were in May. It's just still a fair bit worse than where we were in December of last year.
Let's take a quick break. When we come back, we'll talk about whether or not the case for rate cuts is growing.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long-term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Preparing for retirement is a time-consuming and challenging process. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're at the point where you can see retirement approaching, now is the time to make sure your plan covers all the bases. Our new guide is called Your Retirement Preparation Checklist, and it discusses a variety of important topics as you make decisions for later life. Everything from reviewing your income sources so that you have a full understanding of how much money you'll need in retirement, to addressing any outstanding debt, which may lessen your overall financial burden. Planning for retirement takes a great deal of time and effort, and this new guide is designed to offer you the guidance you may need. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Mike, we got a piece in the Wall Street Journal. It's titled "The Case for Rate Cuts is Growing." And this is something I talked about with Mark Fandetti yesterday a little bit, which is, look, we've gotten some really good inflation data for the last 4 months or so now.
Yeah.
5.
Including yesterday's, yep.
Yeah, really good inflation data. And at the same time, you're starting to see some signs under the surface that the labor market is weakening. I struggle to find areas where the labor market is strengthening right now. I see, it might be 30 to 50%, 40 to 60% of the labor market data is kind of the same, and 40 to 60% is worsening in fairly noticeable ways. And so given that backdrop, you'd say, okay, if we're sitting here right now on the 13th of June, 2025, and I've got CPI year over year at 2.4, I've got core CPI at 2.8, PCEs at 2.2, core PCEs at 2.5, yeah, it's not 2% inflation, but hey, we've never gotten 2% inflation, and I can't let unemployment go to 5. Okay, maybe we start a cutting cycle here. But, and this is the but, you got all these tariffs out here that you don't know how long they're going to be in place. You don't know exactly what the impacts are going to be. And so you look at that and you say, I can't cut until I see a little bit more data, which is why first cuts from the Fed, according to the CME's FedWatch tool, first cut for the Fed is realistically being priced in September, October right now.
Yeah. Well, and this piece from Greg Ip, by the way, written at 5:33 p.m. yesterday, kind of flips on its head when you have tension in the Middle East and oil prices spiking. I know the Fed discounts heavily, and strips out the stuff like oil prices, but let's be clear. Energy prices feed into everything that the Fed looks at on inflation.
Well, and this also, the energy price thing does reinforce the idea that, hey, maybe the Fed shouldn't be moving right now. And the reason for that is that energy prices have been a net positive. Energy prices have helped inflation numbers to the downside over the last year.
A net positive to the decline in inflation, is that what you're trying to say?
Yes, they're a net positive negative is what I'm trying to say.
Right, yeah.
And so ultimately, the case that I made, and I've said this before, hey, if you've got core CPI at 2.77 and headline at 2.3, the only difference between those is that gas prices have come down 12% in the last year. If they go up 12%, now you got inflation running at 3.5. Do you feel comfortable with that? And you got core, because remember, even though core doesn't directly include fuel, it gets incorporated into all these other things. It gets incorporated into airfares and stuff like that. Like all this stuff that ends up, being in core still reflects gas prices. And so you look at this and you're like, okay, so suppose that the next, 6 months we see headline end up at, back at 3, and core goes from 2.8 up to, 3.1. This is without even, any tariff effects. Okay, you incorporate those. Now you're saying, do we have, core CPI at 3.5 and headline, at 4 because oil prices have gone up? Okay, I understand why the Fed may be a little bit hesitant to cut. I'm not saying that they should, factor oil prices in, and they don't. But part of the reason why all these numbers look so good is because oil prices have fallen. And if that reverses, which, by the way, look at the reversal on oil over the last month or so. Let me get the exact date just because I want to be precise here. May 5th, Cinco de Mayo. Oil, West Texas Intermediate, closed at 57.13.
Yeah.
Today, it's at 72.72. It's a 27% jump in a month for oil. Now, gas prices haven't moved that way because, the refining cycle changes and this and that. But you're going to have this incorporated, and gas prices are going to move probably from the 3.12 range up into the 3.25 to 3.40 range. And that's going to have an impact on everything. So I said yesterday, look, if you didn't have this tariff situation out there, I think the Fed could be justified in starting a cutting cycle in June. With the tariff situation out there, the only way they go before September is if the labor market data over the next month gets notably worse prior to that July meeting. You got to have weekly unemployment claims heading close to 300,000. You got to have probably a jobs report that shows, under 50,000 jobs created. You got to have continuing claims heading north of 2 million from 1.95 million. Those are the things that you would need to see in order to maybe justify a cut in July now, because you can say, hey, once you start seeing this stuff, it usually accelerates. And if you're just going to wait until you're already in recession to cut, then what are you doing anyways? Which I get. I understand that.
Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8, and it's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Chuck, I want to keep on the labor market for a little bit here because you mentioned it. We talked a little bit about it. But if you're not looking at the economic data and just paying attention to the political announcements, just yesterday, quote from the president, our great farmers and people in the hotel and leisure business have been stating that our very aggressive policy on immigration is taking very good long-time workers away from them, with those jobs being almost impossible to replace. You combine that with the piece that we're going to cover later about big numbers of people filing for Social Security, oftentimes at 62 years old, and it leads you to wonder, okay, what are these weaknesses in the labor market that you're talking about, Chuck? If, immigrants aren't able to fill these same jobs, hotels and farms are looking to hire to replace them. They can't find those people to replace them. And baby boomers are retiring. Where's this weakness coming from? And there are signals of it that we're seeing in the government data of weakness on the job side of things.
Yeah, I mean, so if you're talking about the area, there's two great questions there, actually. I'll try to wrap this up as quickly as possible. The first is the areas of weakness that we're seeing. Continuing claims continue to rise at a more rapid pace year over year.
Continuing claims are the filing for unemployment and people staying on those unemployment claims.
Yes, and so generally that's in a healthy place if they're rising like 2 to 4% because the population grows, a 1% or so a year, and okay, like you can make this work. We're now at a point where continuing claims for unemployment are rising north of 7% year over year, and generally once you get close to 10 is where things start to get pretty dodgy for the labor market. Another one that we're seeing, normally at any given point in time, anywhere between 11 and 17% of workers report no increase in pay in the prior year. This is from a survey that the Atlanta Fed does. We bottomed at around 11% in late 2023. We're now up to around 13.5% of workers reporting no increase in pay because, remember, no boss comes to you and says, hey, great job, Mike. Here's a 10% pay cut for next year.
No.
Instead, they might say, hey, things are tight. We can't raise your salary. This is something that correlates pretty strongly with a rise in unemployment normally. It has not at this cycle to this point, but I think we're more towards a balanced labor market now where it starts to correlate again potentially. So you've got some things under the surface that are dodgy. And the other thing that I'll add, just in terms of economic growth, remember, economic growth is two things. It's hours worked times how much stuff you produce during those hours. If you got a bunch of baby boomers retiring and you got a bunch of people who are not in the country legally that are either being deported or are afraid to work for fear that they may be deported, you've got a bunch of people being sucked out of the labor force, and that is not good for GDP.
No.
So that's something that I think we really need to pay attention to as far as how it can affect these things going forward. Let's take a quick break here. We still got a lot to come on the Financial Exchange. So stick around.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer in New England is nearly upon us. The kids are home from school, the sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we got markets selling off. Not modestly, not extremely.
Somewhere between those two.
We got markets selling off, I guess, but that makes it sound like it's like big when you say markets selling off. Like the S&P's down 0.75%.
No, markets cratering would be big, or markets. I don't think markets selling off insinuates that they are having a big down day.
Markets are falling.
Generally less than 1%.
Extra mediumly.
Yeah. Okay.
I think that's how I would describe it.
Okay.
The Dow's off 541 points, about 1.25%. S&P's off 42 points, about 0.75%. Nasdaq down 166, about 8 or 9/10%. We've got the 10-year Treasury selling off as well. So this again kind of echoes of early 2022 in some respects, where hey, you got stocks and bonds selling off. And you got oil moving up on, a geopolitical item. Like, we've heard this story before. I'm sorry, not this exact one, but it's rhyming a little bit to me. And so the 10-year Treasury is back above 4.4% to 4.414 at the moment. Mortgages nationally yesterday fell 0.4% to 6.85%. This is probably pushing back up to around 6.9, so continuing to hover in that 6.8 to 7 range that we've been in for quite some time now on the national average for 30-year mortgages. Oil now up 5.5% on West Texas Intermediate to 71.78. Expectations, based on Patrick DeHaan from Gas Buddy, is that we will see the national average for gas prices rise anywhere from 10 to 25 cents, depending on how the next week or so goes in the Middle East and the potential impact on oil and gas markets. And we've got gold moving up as well, up $46.40 an ounce to $34.48.80. Obviously, the big thing triggering these moves, the attack on Iran by Israel overnight. We are continuing to monitor the situation for, how it may impact markets and the economy. But the big one at this point is oil prices moving up is yet another cost that companies may have to deal with if this is any protracted engagement here. We don't know how long this may or may not last. We don't know if Israel's been so successful with their initial assault that Iran comes out and says, look, we have to end this. Like, we can't do this anymore. We don't know if there is a larger response that's planned by the Iranians, but we'll continue to watch things. But right now, that oil price jump is the big one that we're seeing as a result of this. Anything else, Mike?
No.
Okay. Let's see. Let's kick this off this hour with talking a little bit about this piece in the New York Times. Where's the inflation from tariffs? Just wait, economists say. And here's where we stand, is the imposition of tariffs, the 10% blanket tariff and higher ones on China, has been in effect for about 2 months. And during the month of April, we saw, a dramatically lower volume of shipping coming into the United States. And part of this is because there was a bunch of front running by companies to try to bring in inventory in February and March, trying to front run any potential tariffs that may be imposed. So one of the logical explanations is, hey, we've been working through that pre-tariff inventory, and companies are going to start raising prices soon, and then it'll show up in the summer inflation data. This kind of meshes with what companies like Walmart have told us. What else is outlined in here, Mike?
Well, in the article they talk about, it takes a while for this stuff to feed through. Companies could just be eating some of it. I want to make the point that we made very early on here, Chuck. Businesses don't have the pricing power that they did in 2021 and 2022. If they go and raise prices on consumers seem like right now they're just going to buy less of that stuff. And so in 2021, had you had this type of news that, tariffs are going into effect, I think a lot of CEOs would be out there bumping up prices even if they didn't have to, because they had already stockpiled supplies and had plenty on hand. And, speaking to it during the earnings calls that, we did see prices that we were able to pass through to consumers. You are not hearing that on conference calls. You are much more hearing the pushback from CEOs saying, hey, if this gets fully implemented, it is a real problem for our business, and we don't think we can pass this through to consumers as much as we would hope. Here and there, you have Walmart who mentioned they plan to pass things through. You have Amazon who did so and then took a step back. But the answer to me as to why we're not seeing it, in part because companies have some stock that they didn't have to pay tariffs on, in part because the tariffs are a lot less significant than was previously expected, and also in part because the pricing power is just not there at the moment given the weakness of the consumer, or at least perceived weakness of the consumer.
And so here's the thing, at some point, assuming that these stay in place, they are going to show up in the data somewhere. You can't just have the immaculate imposition of tariffs where, hey, there's a 10% blanket tariff on all imports into the U.S. and it just doesn't show up anywhere.
Right.
It's going to show up somewhere. What are the possibilities for where it could show up?
Consumer prices go up. You could see shrinking profit margins of domestic companies who pay these tariffs. Those are to name a few. I mean, hypothetically, do you have producers overseas who absorb some of this by lowering prices and they absorb some of the price shock? Yes. Possibly. Yeah, yes. Possibly.
And most likely it's a combination of all these things. It's, okay, some of it's going to get passed along to end buyers. Some of it's going to get absorbed by U.S. companies selling this stuff. Some of it's going to be absorbed by companies making the stuff overseas. Some of it might be absorbed by shippers that, figure out how to be the bridge between, hey, I'd rather have the boat, 89% full than 87% full, so sure, we can take you a little bit cheaper than we thought we would. It all adds up in these different areas, but it's not going to just never show up anywhere. Another place that you could see it, what about lower demand overall? If companies try to maintain margins, which is what they often try to do, one of the places that they go for that is they say, look, we got to cut headcount. And when you cut headcount, you eventually end up cutting, aggregate demand in the United States. And so is that something that we see as well? Potentially. So I think to this point, it's safe to say that the inflation data hasn't shown anything very meaningful. It's been basically nothing of note there. The labor market on the surface hasn't seen any problems, but there are some cracks appearing underneath. I don't know if it's related to the tariff pricing so much as the tariff uncertainty. And as far as profit margins, well, we haven't gotten new corporate earnings and projections for them yet, so it's kind of okay, like we'll see what happens there. But I think overall, the second half of this year is when you are going to see some of this show up. And the open question is the impact large enough to derail the U.S. economy, or is it a small detour? Either way, and this is like every economist saying this, and this is me saying this as well, you're going to have a slower economy in the second half of the year than the first half.
Seems likely. Seems almost inevitable.
Is that slowdown, hey, we go from 2.5% GDP down to 1 or 1.5, and then rebound from there, and it's not a huge deal? Possible. Absolutely possible. Or is it, hey, we're heading from 2% GDP, and this isn't great, and GDP's going negative, and there's some job loss, and we got some kind of recession that materializes? Also possible. I don't try to say that I have the crystal ball that can tell you exactly what's going to happen, but acknowledge the possibilities of where things can go, and also acknowledge that these can evolve as the tariff picture evolves. You could put someone in front of me that says, Chuck, tariffs are going to be higher on January 1st because of ba-ba-ba-ba-ba. I could buy that. You could tell me, put someone else that says, Chuck, tariffs could be lower by January 1st because of, da-da-da-da-da. I could buy that too. There are plenty of reasons on each side why the situation could evolve to be either better or worse, and we're just going to have to see where we go. I know that's not satisfactory, where we always need to have the answer, man. But we don't have the answer right now. We're just going to have to see. Let's take a quick break. When we come back, we'll do a little bit of trivia, and then we're going to talk a little bit about the housing market and how it relates to inflation as well.
The Financial Exchange has gone national. Hear the show daily on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news, what's happening on Wall Street, and the president's economic agenda. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Preparing for retirement is a time-consuming and challenging process. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're at the point where you can see retirement approaching, now is the time to make sure your plan covers all the bases. Our new guide is called Your Retirement Preparation Checklist, and it discusses a variety of important topics as you make decisions for later life. Everything from reviewing your income sources so that you have a full understanding of how much money you'll need in retirement, to addressing any outstanding debt, which may lessen your overall financial burden. Planning for retirement takes a great deal of time and effort, and this new guide is designed to offer you the guidance you may need. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax.
Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com. Time for trivia here on the Financial Exchange, and today is Chris Evans' 44th birthday. Evans is best known for his portrayal of Captain America in the Marvel films. Evans grew up in Massachusetts and even went to high school with actor Jeremy Strong. So, trivia question today, which Massachusetts town did Chris Evans grow up in? Once again, which Massachusetts town did Chris Evans grow up in? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece in Bloomberg opinion by Connor Sen. The South is beating inflation but not housing.
Can we just talk about that title for a few minutes here?
The title, I'm guessing
I know Connor didn't write it, but I understand fundamentally how you beat inflation.
But how do you beat housing?
I don't know. I don't know what that.
Scream at it.
I don't know what that means. Beating housing. I mean, I would argue that if you polled Americans and asked what's the biggest issue surrounding housing, I would think it's housing affordability, to which case, the South is beating that too. So I'm confused by the title.
In some respects.
Yeah.
When you look at what's happened to insurance premiums down there, it's been
not so
dodgy.
Much.
So here's what Connor's saying. He's saying, look, the reason why the CPI is showing what it's showing right now is because shelter cost is still a big chunk of the gains. And in particular, if you look at what's going on with home prices in the South, they are a huge drag on inflation in that region because home prices have been falling in many parts of the South. And that's creating less economic activity in the South and putting the South in kind of a dangerous spot when it comes to recession. I know we don't think of recessions as being regional, and we probably shouldn't, but he's basically saying economic activity in the South is really at risk, and if it weren't for housing activity in other parts of the country, the Fed would probably be cutting rates already.
We talked about this on the show a couple weeks ago, but D.C., Texas, Colorado, Florida, Tennessee, Arizona, Utah, Washington State, Idaho, and Hawaii all have inventory levels in their states that are higher than what they were seeing in terms of inventory back in 2019. Those are the states that are really feeling some of this. Mostly, you're talking about southern states here.
So, again, this kind of gets at the view, which is, yeah, there's some kind of gnarly stuff happening that if it weren't for the potential for tariffs to pass through a bunch of inflation over, the rest of the year, I think there's a really credible case for the Fed to be cutting right now. And this is somewhere that I've kind of evolved to over the last, 2 or 3 weeks as we've gotten more data. The labor market stuff is legitimately concerning at this point as far as its potential to worsen. But how do you reconcile all of this, together, I think is the big question. And the last thing the Fed wants to do is say, all right, you know what? We're going to do, a couple of cuts. And as part of that, then, okay, you see economic activity maybe pick back up a little bit right as you're heading into this wave of tariff inflation. And now you got unemployment that shows a little bit more stability in the fours, but inflation starts heading, back towards the fours as well. And you're like, oh, gee, do we need to hike now?
For those that didn't live through and study economics during the early 70s, which would be everyone currently in this room, can we explain why? Like, why doesn't the Fed want to have to deal with that, of cutting and then having to hike rates again? What's the problem with lowering rates because the economy seems to be weakening with the knowledge that you might have to reverse course and go in the other direction in a few months?
Well, I mean, it kills the credibility of the move, and then it effectively dampens, what that move means in the future. But beyond that, look, inflation's something where when it shows up, historically, it's tended to be sticky. And
big exception in 2022.
Yeah, and even there, it was stickier longer than the Fed wanted.
Yep.
You remember the whole fight about is it transitory or not? We had
it was less transitory than they were hoping for.
Right, it's where we coined the term intermediatory.
Yeah, correct.
And that's how we continue to describe inflation in the 2020s. It was intermediatory. So I think that ultimately it's that plus the fact that, look, there's a reason why governments around the world hate inflation. And it's not because it's inherently bad for their bottom line or the bottom lines of companies. It's because people hate it and it causes social upheaval. Now you can say high unemployment does too, and that's true to a certain extent, but
inflation affects everyone. Unemployment in the worst case scenarios maybe affects 1 in 10 of the voting public.
Yeah, it's
less than that, actually. I mean, thinking through that for a moment here, given the number of retirees, if we saw even 7% inflation unemployment right now, that in fact affects a very small number of actual voting Americans.
It does. I mean, psychologically, it still has an impact because
it does.
Everyone's looking over their shoulder, wondering, "Am I going to be the next one laid off?"
Yep.
But as long as you're getting that paycheck, you still say, "Okay, I still have my my paycheck here." The inflation side, it's everyone feels it, and it just economists have looked at this for a while, and they can't come up with any reason why inflation's inherently bad other than people hate it. Mm-hmm. And the reason why is very simple. Hey, I bought that same container of milk last week, and it was 20 cents cheaper. Did it get bigger? No. Are the cows better? No. Does it taste better? No. Then why am I paying more for it?
Yeah, it's frustrating.
It nags at you. It burns you like that. So that's I think the big thing is the Fed and other central banks. They do not want a repeat of inflation. The counter to this is, I'm a big believer, no matter who it is, pay attention to what they do, not what they say. And when you look at what the Fed under Jay Powell has done, they've always taken the first opportunity to be dovish that they can.
Yep.
So, yeah, they might talk a hawkish game here. If push comes to shove, they probably move to stem the bleeding on the labor market before they do anything with higher rates because of inflation. Quick break here. We got the trivia answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Your Retirement Preparation Checklist. One of the items on that list, reviewing your investment portfolio. And Mike, I think one of the biggest mistakes I see people make is making no changes to their investment portfolio right up until the minute they retire and then making a drastic shift.
Yeah, I mean, look, that drastic shift can sometimes be called for, but only if the preparation hasn't been happening over the years. And that's where having a checklist in place and really addressing these things well ahead of retirement is the most comprehensive strategy and probably the best planned strategy that you can have out there.
And when we talk about an asset allocation in retirement, it's not just, hey, I'm X years old, I need to be, situated in a certain fashion. It's much more taking into account your income needs over different time horizons, any other big spending items that you might have, and obviously risk tolerance and time horizon for retirement. Big difference between retiring at 60 and retiring at 70.
Well, and the tools can change too, right? Even if you were in a tool that made you automatically more defensive as you got closer to retirement, like many 401ks do, it might not be the best distribution tool for you when you're actually ready to pull that trigger, stop working, and then ultimately begin taking withdrawals out of that 401k. And so really important to review this piece by piece.
Our guide this month is titled Your Retirement Preparation Checklist, and the way to request it is by calling 800-393
4001. Again, the guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in sell-off mode, but not as bad as about an hour ago, following Israel's strikes against Iran overnight, sending oil, gold, and geopolitical uncertainty higher. Right now, the Dow is off by just over 1%, or 443 points. S&P 500 is down by only 0.5% now, or 30 points. And the NASDAQ is down by 0.6%, or 124 points. Russell 2000 is down just over 1%, or 23 points lower. 10-year Treasury yield up 7 basis points, now at 4.42%. And crude oil now up 6.2% higher, trading just above $72 a barrel. With oil prices spiking due to concerns over the supply outlook, Chevron and ConocoPhillips, Occidental Petroleum are up anywhere between 1 and 3%. Defense stocks like Lockheed Martin and RTX are up by about 3% on the day. Several airline stocks also seeing losses on the prospect of higher fuel costs and slower demand due to the rising tensions in the Middle East. United Airlines and Delta now down just over 2%. Cruise lines, including Carnival and Royal Caribbean, are off anywhere between 2 and 4% due to heightened risk deterring vacationers and increasing oil prices. Outside of the Middle East news, Adobe posted stronger than expected second quarter earnings and revenue and also raised its annual outlook. However, analysts say generative AI could take away from Adobe's business if it doesn't move to keep up. That stock is sinking by 5%. According to the Wall Street Journal, Walmart and Amazon have recently explored whether to issue their own stablecoins in the U.S., and furniture retailer RH jumping 11% after it swung to a quarterly profit despite tariff uncertainty and a shaky housing market. I'm Tucker Silva, and that is Wall Street Watch. And the trivia question we asked in the previous segment was, which Massachusetts town did Chris Evans grow up in? That'll be Sudbury. Who was our winner today? It was from Oakham, Massachusetts. I know that. I deleted the email. James from Oakham, Massachusetts, won that Financial Exchange Show t-shirt. Congrats there. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, can we go back and just talk about Michigan for a second, just because I was digging into some of the data a little bit more?
Sure.
And this is why I'm just not sure what the predictive value is for this at this point. So by June of 2026, 1 year forward inflation expectations, where do you think they stand for self-identified Democrats that responded to this?
Let's see. The average was, let's call it 6.5%. 10%.
Where do you think it stands for self-identified Republicans? 1.5.
Okay.
It's probably not going to be either of those.
Right.
And where exactly is it going to be? I don't know, depending on, exactly how things go. Probably somewhere between, if this Israel-Iran thing is, over quickly and not, a lingering thing, and tariffs, slow the U.S. economy, actually, and you end up with, some kind of recession, you can make a case that a year from now inflation could be closer to 2% than anything else. Not for the right reasons, but, you could make that case. If they go badly, and maybe if tariffs keep going up and yada yada, and this thing in the Middle East, continues on, you could have me convinced that inflation's close to 6 or 7% a year from now. The midpoint of that, okay, probably somewhere between 3 and 5.
Chuck, it is wild to see just how dramatically people's political views are beginning to and beginning to more severely and continuing to affect their financial thinking. Because this is one thing, right? And I don't know whether this is genuinely Democrats thinking that inflation is going to be 10% or intentionally trying to make a survey result look bad for the president, or something else. I don't fully understand the psychology behind it, but
I could see how you get there if, again, like if you think it through just from this perspective. You say, okay, if I'm someone who is not a fan of this administration and I just saw 10% tariff slapped on every country, sure, I think prices are going to go up by 10%.
Yeah.
Like, it's a very linear way of thinking. There's going to be a 10% tariff, prices will go up by 10%.
Yeah. It's wrong, but it's
wrong, but like
yeah.
I can see how you get there. I can also like see the case where you're like, okay, maybe it won't be that bad because the inflation so far this year hasn't been that bad.
Mm-hmm.
I could see that case being made. Extrapolating either of those for a full year and not taking into account like the full picture, problematic. And
the question that I have, which is a pretty important one, is if you think this, are you following through on it with your actions?
And the answer basically that we've seen is no.
Well, yeah, I think you're right, but I don't know. I've got firsthand experience of people following through their political fears with actions. Maybe not on purchases, but how many times have you seen somebody say, I hate this president, I'm terrified, sell my stocks?
Yes. I've seen it with every president since I've been working in this business. I've seen it with Obama, Trump 1, Biden, Trump 2.
How about I'm really worried about this Congress and what they're going to do. I'm taking my Social Security now, not waiting. I have a tougher time exactly dragging that out in terms of what's your political view on that, but I keep seeing this stuff influence people's decision-making process when it comes to their financial future. And it goes back to our age-old adage, right? Emotional decision-making is, by definition, bad decision-making when it comes to these all critical pieces here. And
like, emotional decision-making is always bad decision-making. It doesn't even have to be about your finances. Emotional decisions usually don't work out well.
Fair.
And this isn't just anecdote, by the way. There's a piece from NPR right here that's talking about Social Security claims, which is one of the things that you mentioned. I'll quote, Social Security retirement claims tend to follow a seasonal pattern each year, and they increase over time with the aging of the population, says Jack Smallgan, a senior policy fellow at the Urban Institute. This spring, something different happens. Between January and May, the number of claims was nearly 18% higher than during the same period last year. 18% higher.
So one thing, you can strip a bunch of this out because of the Social Security Fairness Act. So I'm willing to do that. There are a number of Americans, probably hundreds of thousands of them, maybe tens of thousands of them, I'm not sure, who couldn't file for Social Security previously and suddenly became eligible in January. So that does account for a little bit of this. But I'd be willing to bet there's a whole lot of others who said, nope, terrified, worried about Social Security getting killed, don't know what Republicans are going to do, I'm taking my Social Security now. And that can be detrimental. I mean, when I think through people's financial plans, yeah, there's some of them who are at risk of, a big market collapse taking them out. But far more often what I see is, yeah, if you live like a long life, if you live to 95 years old, inflation could eat you alive. What's one of the best inflation hedges you as an individual have? It's your Social Security benefit. It's the only one that's hedged to inflation. If it's bigger to start with, it's going to help you more against that inflation hedge. And so I don't know you personally if you're listening to the program right now, but my point is these decisions keep getting made by people in a vacuum, and it's a mistake, people. It is a mistake to make these decisions in a vacuum and with emotion as the main driver for it. And if you are approaching these decisions, don't let those emotions get in the way of logical decision-making processes. If you want to have some help on that logical decision-making process and have somebody take a step back and look at that big picture, call us at the Armstrong Advisory Group. The number is 800-393-4001. We'll sit down with you, evaluate your personal situation to help you assess what is the right decision for my portfolio, for my Social Security, for my pension. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do you want to talk about apartment prices or electricity prices now?
I want to talk electricity prices, if you don't mind.
Electricity prices in apartments or everywhere?
Everywhere.
Okay.
Yeah.
So, Piece in the Wall Street Journal. Your electric bill is rising faster than inflation. Here's why. Why?
Nat gas prices. They allude to a few different things. They try and make the connection to artificial intelligence. And I think that there is something that is ultimately going to be there, that we are seeing dramatic increasing demand on the electric grid for the use of these giant data centers that run 24 hours a day and need a giant amount of electricity and cooling in order to work. I don't really see the actual numbers connection here. Nobody in any of these articles yet is pointing to, and that has resulted in this much additional demand on the grid and therefore nat gas prices going through the roof. But nat gas prices have increased, and you do have to just kind of wonder, does this get to a crescendo where we start seeing energy prices increase dramatically at some point in time, or is it just this slow and steady rise over time because of these new entrants onto the grid?
Yeah, I don't know how to incorporate all of the I don't know how to incorporate the projections for additional demand because of AI. Just because I don't know how it dovetails with regulated utility prices.
Yeah.
It's not like in most of the country you just wake up as a utility and you're like, hey, we got a new data center that wants to come on board. We got to raise prices in order to cut demand, or we got to kick a bunch of people off. That's not really how it works.
No, but they are also price takers, right? And so if all of that additional demand is causing more buyers of nat gas to run these facilities, then they're going to realize that in their P&L and need to drive that price higher. So it's both impossible for me to see a scenario where a bunch of new demand comes onto the grid and prices don't go up. It's also really unclear to me how it gets navigated, how the regulators deal with it, and how much prices go up and under what time scenario.
Here's the other piece to watch on this is the mix between how much oil gets produced domestically in the U.S. and how much of it's overseas. And you say, Chuck, why does oil matter for this? The reason why is that the vast majority of U.S. oil produced right now is from shale deposits through fracking. And one of the major byproducts of fracking is a whole bunch of nat gas that we produce. It's why the U.S. is the largest producer of nat gas in the world. You look at it, and it's just not particularly close. Russia is a distant second, 30% behind us. And then Iran is an even more distant third, 60% behind us. So the U.S. is a huge producer of nat gas because we frack most of our oil, and so you get all this nat gas that gets spun off as a result of it. If you have lower oil prices, which is good for us as drivers here in the Northeast where we are based, the downside to that is lower oil prices means fewer rigs in the ground in the United States because U.S. companies don't want to take the risk. And by the way, this is borne out by what we have seen as far as rig counts in the U.S. that have now begun to roll over this year. With lower prices this year, the rig count at the start of the year was about 589 rigs. It's down to 559. Now you might say, look, it's a decline of 30 rigs. What is that? Well, it's 6% of active rigs in the U.S. are now offline, and it's trending down. If you're going to produce less oil domestically because oil prices are low, it may have the impact of pushing up nat gas prices because you don't get as much of it, and so this is somewhere where you end up getting hit potentially.
Yeah.
Let's take a quick break. When we come back, it's time for Stack Roulette. The Financial Exchange is now available across the country and around the world on SiriusXM's Business Radio Channel 132. Stay informed about Wall Street trends, economic policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax.
Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
All right, Mike, what do you got for me for Stack Roulette?
Walmart and Amazon exploring issuing their own stable coins, according to the Wall Street Journal. And I feel like we need to spend a minute on just what the heck this means, because in addition to this happening, there's other, obviously, daily crypto news out there, including some publicly traded companies adding things like Bitcoin to their Treasury reserves, which is a completely different type of situation that affects the stock price differently. But I'm having a tough time figuring out, in the case of Walmart and Amazon, is this an announcement that they actually see making sense for them, or is it an announcement to try and drive the stock price higher like we're seeing with the Treasury announcements here and there?
Both.
Yeah.
So here's if you're not familiar with the concept of a stable coin, the idea is that it tries to have a stable fixed value, in most cases $1, and allows for faster processing than using conventional networks, and still gives you, the whole distributed ledger thing and yada yada that crypto people like. What I'm trying to wrap my head around is how Walmart, let's use Walmart. How do they get to the point where people are using this? And what I mean by this is the benefit to Walmart, if they can get people to use stable coins, like a Walmart stable coin, call it Wallcoin.
It's huge. You don't pay Visa anything.
Right, you don't have to pay 2 to 3% transaction fees, and so you're like, great, we get to save all that money.
But why would I do it as a consumer?
So, me as a human being, I look at it and I say, hey, when I pay on my Visa card, I get a bunch of cash back or points that I can use for stuff. Why am I going to use your Wallcoin? What's the point of that? And Walmart's going to come back and say, well, if you use that, we're going to give you 2% off. And I kind of look at it and I go, I'm already getting cash back from my credit card. You're going to give me 2% off, which means you're eating into your margins. What's the net benefit to anyone? Nothing.
Is it also just a fancy way of storing your money on a Walmart gift card?
Yes.
Right? I mean, I know we're talking stable coins. I know we're talking all this stuff, but, let's talk about what this is. It's a gift card held on a digital currency.
Which, to be fair, there are companies, Starbucks, that have, thank you, it happens every now and then, that have basically, they have these line items that they have on their quarterly reports because they have so much in accumulated, potentially deferred liabilities that they have just sitting there, but they can't invest the money during the time, and so it's kind of like, okay, do you just have, all this money loaded onto Walmart cards then? And Walmart, yes, they have this deferred liability, but they can do something with it to maybe earn some cash in the interim? Maybe, but now we're just talking about financial engineering as opposed to building a better company.
It's the American way, Chuck.
It is. It is until it's not. See General Electric in the 1990s and 2000s.
True.
Let's see. What do I want to talk about? So we did stable coins. Barbie's partnering with OpenAI.
No. Just no.
What are we really doing here?
Just no.
Mattel and OpenAI said they had formed a strategic collaboration to bring the magic of AI to age-appropriate play experiences.
Mattel, you are so desperate right now.
I'm going to go with a hard no here on this one. But I can see we're heading to some really dystopian places in the not-so-distant future. Markets remain broadly negative, but off their lows. We're done for the day, done for the week. Have a great weekend. Have a great Father's Day. We'll see you Monday.